Good morning. So today we're going to look at idea number 5, which is Mineral and Financials Investments Limited. So yeah, really like this idea. I suppose I like them all. um, so I guess what drew me to this, was the discount is good. Um, that um, that if we look at their last accounts, we can see an NAV of 11.4, which is 29.1p. You can buy it today at less than half that. So looking at that, you'd think, goodness me, why the discount? That's more than 50% discount. Um, and this yeah, this 72% has closed a little bit, but only a little bit. It's still well over 50. But more than that, when I started to dig into the holdings, um, I guess a couple of things as well. When I dug into the holdings, they were impressive, and we'll talk about those in a minute. But also the track record. Now, one of the readers quite rightly said, "Well, why is the share price the same?" So it's essentially gone from a premium to a discount, and the share price has not moved over time. So if we go and look at what that's done over, say, 10 years, so I mean it's gone from 8p to 13p. So we've got 50% over 10 years, and what about 25% over 5. So the share obviously you could buy it at a low point of 7, and now today it'd be 12 and a half. So obviously I'm saying that 5-year 10-year point's kind of a little bit arbitrary, and we can see it spiked up here to 25, and this was back towards the point where a lot of mining stocks were in quite a bullish phase, and the gold price was in a bullish phase. Funnily enough, it was nearly as high as it is today. So yeah, the fact that this is kind of more or less not stood still. This is stood still despite a really sharp improvement in the NAV. I mean that alone, for it to increase 5p in a year, 20% in a year, and yet the share price hasn't moved. I kind of saw that and I thought, well, what's wrong with the holdings? So let's get into and it's interesting actually, because one of their chief theses, or their chief thesis, I should probably say, is that the S&P has S&P being the green line, has been on a tear, as we all know. Obviously, some of that being Mag 7 and things like that, whereas this GSCI, which is an index of commodities, has languished. But back in the noughties, we can see there was a time when this one languished, when the S&P languished, but commodities shot up. So relatively, if we actually inverted this, and these guys do this in their presentation here, and it's very, actually, I mean, my chart and their chart's far better. I probably should have just cut and pasted this in to my article, but where they sort of argue is that we're at this what they describe as a 50-year low. See, that's 2019 there, and I think it's fair to say that the S&P, this ratio, if we say, well, since 2019, which is this bit by here, you can see the divergence. I mean, that has literally doubled, whereas that has moved 15%, maybe 15%. So I think this blue line, in fact, this is the reason I didn't use this, despite the inversion actually sort of being more illustrative, but this blue line is somewhere down here. I mean, in other words, it's far lower than the dot-com bubble, far lower than now they do say what these so I'm oh yes, Gulf crisis. So this would have been the um, late 80s recession. This one would have been the I suppose, yeah, not quite sure why that would have happened there in the late 60s on item one, but I don't think they particularly say either. But anyway, um, the relative value is in commodities is just incredible, and some readers have and I have commented among ourselves about how it feels like a once in a generation opportunity. Um, so when I saw that they said that, I kind of agreed. That's just my personal opinion. By the way, everything that you're um, looking at and listening to and watching today is not investment advice. You make your own investment decisions. I'm purely just giving an opinion of just a personal opinion, and just describing my article, which also is not investment advice. So just put that disclaimer in here. But yes, let's get into the holdings. So MAFL have got two types of holding. They've got tactical and they've got strategic. Um, Tactical is basically listed companies, so we'll talk about those a bit later. Strategic are generally unlisted companies, but it's a bit nuanced. So they're unlisted, but maybe heading towards a listing, for example. Anyway, we'll get into that. So let's start at the top. Digby. So I say in the article here, I've Googled a mine. So these guys, Digby's, have got this global resource map where they quite literally you can say, tell me about every tungsten. Um, if I start typing in tungsten, so tell me about every tungsten mine across the world, and so it's pretty cool. So you can sort of at a glance see, all the known projects, or at least that they've mapped, which may or may not be all of them, to be fair. In fact, if we go up to Spain, because I've been writing about this recently, yeah, I know for a fact that there's other tungsten mines in Spain and in Portugal that are not on this map. So yeah, the map's not the big part of their business. The big part of their business is this ESG. And I think it's quite interesting that, ultimately every mining project will move through this stage, and well, I mean, if they're successful, they'll move through this stage, and this stage. So Digby is essentially hoovering up three sets of fees with per project. So obviously, if you've got multiple projects, then multiple fees. Yeah, it feels like a good business. Obviously, there's no financials or no disclosure. The holding that MAFL have got is they say themselves is quite small, is quite modest. But as a little holding, I think that's actually that kind of, to my mind, makes sense. Seems like a smart investment. Is my personal opinion. Idion, the second one, is a tomography tool. So there's a number of these out there, and in fact, we'll talk about a second one in a minute. But this one is a direct holding. So this is Idion. These guys have worked with Orano, and this video that I included in the article kind of shows you what they're doing. So it's all these coloured lines and coloured blobs that indicate mineralization, essentially. But their pitch is that they can cut down on drilling, that they can help interpret results faster, quicker, and essentially do a couple of things. Bring a DFS to far faster with far less cost. And from the looks of it, I mean, they appear to have success in their Orano and BHP project, and obviously those are great names to have as a case study. They're working now with with a project called MacPass, which is being funded by the Canadian government. So there's 12 million grant, or the equivalent of 12 million pounds grant from the Canadians, and there's talk of a funding round, and the implication was from MAFL that will potentially be at a higher valuation. So there's an NAV that's going to grow. So again, it kind of feels like could be a smart move. Don't have any financials, don't have any other substantiation other than a sense that it feels like it could be a smart move. Obviously, BHP is a very credible case study to have. Moves me to item 3 of the portfolio, so Golden Sun. So this is actually the mine in Costa Rica. So the mine's called Bella Vista, or Bella Vista, I suppose, in Spanish. Anyway, they're producing at 400 a day, and I basically crunched the numbers, did some maths, and this is kind of me sort of saying should. So this is my supposition rather than anything that's there in black and white at this stage. But if I'm right, that generates to a profit of something like 14 million a year. And when you consider that this is held at about 4.2 million pounds, well, that means 14 million would generate a PE of about 3 times. So, and that's based on MAFL holding just over 5.5% of this. Oh, I did correct that. Hang on, let me just do this. There we go. As if by the power of Grayskull. There we go. Yeah, so that's the third holding, and we're going to come back to this one because not only is there an equity 5.53 equity holding, there's also a spin out business that is like a contract driller, contract gold operator, but also a prospector. But also there's a net smelter royalty over this mine. So yeah, it's been in ramp up since April this year. So it's relatively early days. So again, you'd kind of like to think that the NAV on those sorts of economics, if I'm right about that those sorts of economics are pretty compelling and the NAV goes up. But it's also possible that Golden Sun could be listed, could be IPO'd. I'm not saying that's definitively going to happen, but that feels like a good candidate for an IPO. Which brings me then to Redcore. So Redcore's fascinating. So this is a polymetal. So it's gold, it's tin, it's copper, lead, zinc. So it's a polymetal mine. This was the original. These are the current economics: 39% IRR. A net present value of $147 million. Payback period of just 2 years. Very, very low sustaining cost. So yeah, it's there you go, there's our mix of minerals, and it's sort of here in southern Portugal. So just dig into this a little bit more. Let's go in and look at it. So obviously here I've just lifted this from their presentation. Yeah, so the actually it's worth me showing you this bit here as well. So MAFL MAFL own 20% of Redcore Empreendimentos, Mineros LDA, which in turn owns 85% of the project. This is the Portuguese government. They own 15% of the project, or at least it's an offshoot of the Portuguese government, I believe. This entity here. This is a listed American company. So Ascendant are or in fact, sorry, apologies, Canadian listed. These guys up here, Canadian Resources. So these are involved in, or majority involved in the project. There is an option for MAFL to drop from 20% of this to 5% of this. So it's the 15% so 3/4 of its holding is potentially going to be bought, and the it's interesting because the value that it's in the NAV is one number. The value, if you go to Ascendant Resources and look at its liabilities, is a completely different number. So I talk about this here, where the so the NAV is 3 million in the last, so that 29p includes $3 million of that is the holding in Redcore. But there's 3.2 million potentially hidden value for the sale of for the sale of that 3/4. Now, the other thing that I've in fact I haven't drawn out in this article, and I've just realised talking about these things can kind of do this, where actually on the fly you think, actually, that 3 million, so we're actually talking about selling 3/4 of it for 6.2 million. So it's not a 3.2 potential gain, it's actually a 4.2, because 3/4 of that would be 2.25, that's 6.2. So you're looking at a 4 million upside if it sells to Ascendant. If Ascendant say, yep, we want to go to 95%, here's $6.2 million. Thank you very much. And MAFL have got a bit of a track record of doing this, where they'll put something on the books at a low price, they'll lowball it, and then sort of, they talk about sort of having it in their back pocket, that they kind of don't over promise, under deliver. They under promise and over deliver, rightly or wrongly. But I suppose my own assessment, is to look at it and say, well, when your creditor, when there's a contingent liability where valued at 6.2, I mean, they're the ones that are going to know what they're willing to pay. So whereas I suppose here they're just trying to be prudent. So you take your own view on that. But the other part to this is that even by selling 15% of it, the other part that I hadn't twigged is that they still hold 750,000, again at this book value. But if we're talking about, so actually, if we say, well, 5%, moderated at 85% will be 3.3, I think. So no, 4.3. So basically, if I say 5% at 85% is 4.25. So, and if we say 4.25 and the economics of this mine are 147, obviously discounted, if we just do that, divide by 100. So really, the NPV value of that remaining quarter that it holds at 0.75 million on an NPV 8% basis after tax is not 750,000. It's over its lifetime worth 6.25 million. So again, there's some hidden value there as well. So you'll be glad you've watched the video and not just read the article, because that wasn't in the article. I'll go and add it in after the video, I guess. But yeah, that's like an interesting insight. So there's more. There's more. That this 39% IRR and this 147, that was based on the economics at the time. At the time, by the way, there's a typo there because that shouldn't be NPV 10; it's NPV 8. I need to correct that as well. Anyway, because if we go to the news flow, and this is after I wrote the article, so I haven't written a further article about this, but what we see here is just 2 weeks ago that they announced that they are working on refinements to the test work, metallurgical test work, and they're expecting to drive improvements to that NPV. That what they're also what they're saying is optimization should result in a lower capex to NPV ratio. That's number one, but also that they've got stronger recoveries, and the results will be published in Q1 2025. So, I mean, assuming that the contingent liability and it's sold for 6.2 million, that remaining 0.75 million that's actually fair value is more like 6.25 million, will actually potentially be a higher number still for MAFL, obviously depending on what the revised NPV looks like. But certainly when you look at the this RNS, we're seeing improved zinc, improved lead, improved copper recoveries. We're seeing I think there's improved vanadium recovery. We're seeing improved precious metal recovery. So precious metal in this context is gold, and potential to improve tin concentrate recovery. So there's a whole manner of optimizations that could just improve the numbers essentially. They talk about them here, that the tailings management, the infrastructure, the crushing and plant layouts, the water management, the project layout optimization. So all of that looks very, very positive. I did say that there was a second technology separate from Idion. So this isn't something that MAFL are invested in, but is connected to this project, which is something that's a little bit like that Idion holding, which is called Hypermetal, the Hypermetal project. And this isn't using muon rays and cosmic rays to map the Earth. It's using it's using hyperspectral imaging. So it's a different technology, but it is interesting that they're working with the University of Evora, wherever that might be in Portugal, and they are, I mean, it says here that there's an anticipated funding decision for this hypermetal, but the idea being that this will provide a visualization and mapping, mineral mapping, create a cutting edge digital twin of the ore body, combining the geochemical, mineralogical and hyperspectral data, improve the precision of targeting. So again, it's kind of the same idea. Let's, rather than drilling a load of holes obviously at a cost, let's kind of use technology to look into the Earth and to know what, as long as the drill cores validate the technology, if you get me, that the technology says, oh yeah, down there there's 30% copper and you stick a hole in the ground and poof, up comes 30% copper. I mean, that could be, obviously that could be pretty, that could be another potential upside, that obviously the NPV, the economics is based upon there being X, Y, and Z costs of drilling and validation and so on. So again, that's quite interesting. But also, I suppose if there's deeper mineralization or greater mineralization, again, depending on how deep this technology is accurate to, could be quite interesting. So it's that's number 4. Anyway, we need to move on. We're at 25 minutes already. So I mentioned that there's a spin out, which is, again, it's I mean, they talk about it being a little over 5%. I mean, I'm presuming it's 5.53%, same as the Golden Sun holding. But these have got 21 exploration permits covering various parts of Costa Rica. They've got 6 rigs. If you go on Google Maps, as you do, maps.google.com, and if we let's go and look at Costa Rica, and basically they are based here. Punta Arenas. They're either this side or this side. I'm not entirely clear on. But this number 1 that you see here, number 1, this is the Trans-American Highway. And if you just go up here, you get to this is Nicaragua, next door, Nicaragua. And Nicaragua has a lot of gold mining already. There's actually quite a bit going on. So if nothing else, I mean, this is quite well located to serve into that market, as well as the nascent Costa Rican market. So that's all positive. They've also got a gold processing plant up, out for hire. But interestingly, I mean, that could be used for one of its own projects potentially. Yeah, anyway, that's kind of another part to it. Toburn is the net smelter royalty. Okay, so and again, there's quite a harsh discount rate on something that's in production that kind of is already happening. To me, that felt quite. Why would you want to discount it by such an amount? That's over and above what Trident Resources discounted their gold streams at, and others. I mean, I just think that's kind of essentially underplaying the hand once again, and they assess the net present value as being just under 400,000. I mean, I did my own calculation based upon that gold price, which, to be fair, is now, I think today it's 2,620, something like that. And I said, well, let's assume that we don't get the whole resource, but let's say just 27% of the resource, which is what MAFL also do, is they assume 27% to arrive at that number. Based upon that gold price, undiscounted, I'm getting to nearly 1 million, well, nearly 900,000. So it felt like that was quite a harsh, it's almost like saying, well, because obviously a net smelter royalty is on the price of the gold, and it's 2%. So 2% of 2,700 is $54. Again, I mean, let's just get our calculator out. So $389,000 divided by 54. So we're saying we're only going to get 7,200 ounces out of a 1.1 million ounce resource. Really? Yeah. So, I mean, if we sort of just do that, 7,203, so we're going to get less than 1% of the gold at an assumed 2,700. I mean, sometimes with these discounts and things, I mean, it's just ludicrous, because at the end of the day, I mean, again, it depends on what the I suppose there's some factoring in project failing and different things like that. And by the way, these guys have a catastrophic event some years ago with um, torrential rain, and I think one of the tailing dams burst and something and something. So, it. I mean, there's always risks with these sorts of projects, um, but Costa Rica is a very safe jurisdiction. It's not renowned for its gold mining. It's obviously got probably very strong environmental protections. That wouldn't surprise. I mean, I don't know that definitively, specific to gold mining, but I would expect that to be the case, knowing what I know of the country. And but this target production, I mean, we're sort of saying, 7,200 ounces. I mean, that's, well, if they get to that production, I mean, that's 3 months of production. Again, I just sort of run the numbers and I kind of go, well, how are we arriving at a value of £389,000? It seems incredibly low. Um, so, but you make your own judgment call on that. I mean, I think even that number could be ridiculously low. But we'll see. Let's move on to the tactical portfolio. So these are just listed companies, and you'll recognise probably, Eco, Barrick Gold, very, very well known. They're almost household names if you're into investing in gold miners, I guess. Um, yeah, not household names otherwise. But there's a couple of ones that caught my eye. Cerrado is based in Argentina, and Argentina is doing spectacularly well since Milei put through his reforms and took his various departments and pulled them off the sticky board and uh, threw them in the bin and said, you know, put bin them all. There's quite a famous video, isn't he, where he sort of gets very animated and throws the various departments in the bin to sort of denote that he's going to cut government spending, and has. And now the government is no longer has a deficit. Its inflation rates dropping, has dropped dramatically. Argentina looks like a very successful country. There's very limited ways that you can invest into it, though, from directly from Britain. There's a few American listed Argentina companies. I think Argentinian Telecom, something like that. But Cerrado is actually one of them. And if you had invested in Cerrado, I think you would have made quite a lot of money. Cerrado, don't know if no, because it's American listed. Let's just try market watch. Let's try that. And Cerrado. Cerrado means closed. Cerrado. La mina está cerrada. Yeah, there he is. So down 4%. There you go. That's positive. Hmm. Or maybe I'm imagining it. I looked at it. I'm sure I looked at it, and it had shot up. Maybe this isn't the same Cerrado. Cerrado. Ah, yeah, there is more. Well, that looks like that's just listed in different countries. That's an American listing. Maybe I'm just imagining it then. Nope, nope. All right, forget that. But I'm obviously this article's not about Cerrado Gold anyway. But yeah, there's. I think it was though that when I looked at it, the value as at 30th of June was 250,000, and the value had risen in November to 500,000. Yeah, so you've got various tactical holdings that have increased, and then one here notably that decreased. So I did dig into that one, and I dug into it after I wrote the article, because it did bother me why had that one dropped when all the others had done so well. And this is the CEO, and in that interview he talks about how they basically had breakdowns, and they're I think it's this mine here, Tahwe is kind of halfway up a mountain. So when it broke down, or when stuff broke down, that they were waiting weeks and months to get a replacement. So it was kind of like in that episode of Gold Rush where the guy sort of jumps in his vehicle and drives 10 hours to the local supplier, and then the supplier says, "Oh, I've got to order it in," and he's sort of waiting in town for 3 days, waiting for the spare part, and then driving 10 hours. It's kind of it's almost like out of an episode of Gold Rush. So rather than messing around doing all of that, you just get your porter cabin and fill it with bits and bobs that are going to be needed when things break down, like pumps and whatnots. Different different things like that. So yeah, look, the fundraise was the reason for it to drop. So they raised $8 million. They're optimizing their mines. I mean, the kind of I looked at the economics of their mines and what they're sort of forecasting, and it looks good. I mean, you could imagine that would or could bounce back during 2025. I don't think I've looked at it for a couple of weeks, but when I did last look at it, it let's have a look. Yeah, so it's up a bit. It's up a bit. So what's it now? 54 Canadian, or 54 cents, Canadian cents. Um, so it's up from 52. So yeah, it's up a little bit, and obviously, well, it's halfway back to where it was at 30th of June. So it's reverted back 60, half of that drop, 130,000 pound drop is reverted backwards. So at 65's come back on. Um, yeah, I guess to sum up, the I suppose the things that I kind of looked at and sort of pondered as well, these tactical portfolio. I mean, these are sort of liquid investments. So that was sort of one thing that I noticed, that obviously they've got some cash on the books, they've got liquid investments, they've got the potential for um, a 6.2 million payment from Ascendant in 2025. And I just kind of started to think, well, like if I were them, and I'm not them, but if I were them, like what would I be doing with all of that proceeds of cash? And there's quite a few areas where those proceeds, which I estimated at 14 million, that what if they sort of said, well, there's a very attractive Costa Rican exploration project. We want to have a little crack at that. They've got they've got a company that they part own that um, can drill that out for them. So there was a few sort of thoughts and ideas I had that I know that's just me speculating. Um, but yeah, and clearly, like, these guys have got a good eye for spotting good ideas. So again, it's just my personal opinion. But yeah, when you sort of look at the fact that you're getting this huge discount for what are actually undervalued assets, as far as I can see, and then you strip out the cash and stuff that's going to become cash, and you very quickly get to kind of like you're essentially getting the whole thing for free, because the value of the cash, or the near cash, is almost the price of the shares. um it's I suppose that's kind of how I look at it anyway. And obviously this track record of NAV growth is that's sort of, I suppose, the proof of the pudding. Um, so yeah, anyway, that concludes this presentation, 40 minutes. Um, thank you for watching. I hope that's been useful. Do give comments and I suppose I should be saying, please like and sort of all of that stuff, like and subscribe and so on. But yeah, do feedback, any good or bad. Always interested in um, understanding how we can, better present these things, or how I can better present these things. So, yeah, welcome your feedback. Cheerio.